Hello traders, welcome to the LFB and our global video charting review. This is for Thursday the 17th of March 2011. My name's Mark O'Haig from the LFB Trade Desk, and we do have to point out before we start the video that any form of investing involves risk. Forex and commodity and futures trading involves substantial risk of loss and is not suitable for everybody, and each investor should do due diligence before participating in any markets. We do also need to point out that there is a disclaimer posted to the LFB website in regard to the use of the video, and we ask that you do read and accept that disclaimer before proceeding. We're looking at the Japanese Nikkei, we're looking at a 1 hour chart, and we're just going to work through the global market outlook and sentiment. A very quiet period of overnight trade saw Asian equity markets holding this Japanese Nikkei futures contract around the 88.50 area, which will now be an inflection point to watch on a technical basis for this week's closing price. It really cannot be underestimated in regard to the importance of holding support on the Nikkei, as downside targets would include another 4% drop down to 8,400, and then potentially an overall drop of another 15% to test 77.50. Now that would be added to the 25% drop that's already been seen on the Japanese Nikkei this week. The G7 meeting of industrialized nations this weekend will be discussing the Japanese earthquake and subsequent reactionary moves that may soothe investor fears. However, the cost of life and infrastructure may not yet be priced in to Japanese equity values, and however heart-wrenching this is, investors will be very much aware that there could be another leg lower to come. Sentiment will weigh heavily on the German DAX if this Japanese Nikkei chart does drop lower. And looking at the German DAX, the front end futures contract, so this month's futures contract, are currently trading around the 6,600 price point. And also looking at the German DAX, we're seeing a 6% drop already this week. A move lower in European trade will subsequently impact S&P 500 futures contracts, which are trading just above the 1250 area. But as we can see with the German DAX here, we've got massive upside resistance with the 100-day simple moving average just above. And in reality, we haven't got an awful lot of support that could be relied upon until we get down to the 62.50 price area, which is another 5 or 6% away at this point in time. On the S&P 500 futures contract, we can also see this 1250 price point, which becomes incredibly important. We've analysed over the course of the last 30 years of global trade experience the importance of these inflection points, and over the course of the last decade, maybe even 12 years, 1250 on the S&P is an incredibly important price area of note. Got to keep an eye on a weekly close above or below 1250, because that really will be likely to instigate a long or short move going into the last 2 weeks of trade in March. Looking at the dollar index, we can see sporadic bursts of movement on the dollar, which are not able to break heavily. And in yesterday's client notes, we highlighted the fact that black swan events, which are a euphemism for rare events, are becoming more and more the norm. As a trade desk with experience in global markets, as we just said, that runs back over the course of the last 30 years, starting in 1979 at the Bank of England, we've seen maybe 6 to 10 black swan events that vary, but 6 that have been very strong in their impact to change the course of global trade. Recently, we've been more inclined to be witnessing a black swan event once every year, over the course of the last 5 or 6 years, which is an incredible move, not just from a natural perspective with a natural disaster, but also man-made disasters as well. They're becoming more and more the norm. But we've got to look at the dollar because it is the global reserve currency, however it is perceived. There is a weak dollar policy at play from the US administration, which wouldn't be openly admitted, but there is a weak dollar policy in play. And at this point in time, that weak dollar policy is getting battled by those overseas exporting economies that are finding the ravages in commodity inflation due to a weak dollar now really starting to impede outlooks. Currency markets moved overnight with price action that favoured the short side of the dollar and tested this 76.30 area on the dollar index futures contract. The main moves are in the Swiss franc, flight to safety, Japanese yen, flight to safety in regard to repatriation and interest rate connections, Great British Pound, and the Euro, which all managed to move towards near term support and resistance areas. However, none of the major pairs have been able to easily break and hold the previous session's highs or lows, and it would seem that the continued pattern of trade will be to sell resistance and buy support in line with 4-hour trends. In general, traders have seen a very choppy and overlapping session of trade, which replicates the moves made this week in reaction to a natural disaster that's unfolding into a potential nuclear nightmare for Japan. Positive thoughts and white light go out from all at this end, and that goes out to all that have been affected in whatever way, with the reality being proven once again that day-to-day market activity pales into insignificance when compared to what many have witnessed this week. It is sobering and it is heart-wrenching. Signals and alerts will be sent to clients as the markets evolve and as near-term price points are able to easily break and hold.